Good afternoon, sir. Good afternoon, classmate. My report is Chapter 3, Securities Markets. Trading in the securities. Securities can be traded both in exchanges and the over-the-counter markets. Trading in the stock exchange are characterized by the following. Exchange transactions are carried out on the floor of the exchange by its members on an agency basis. The facilitator of exchange in the stock market is called a broker and is paid a commission. A transaction in an exchange is exposed to the public. Less selling effort is required. A complete record to transactions generally becomes available almost immediately to members of the exchange, professional traders, and the public. In the trading securities are investments in debt or equity that management plans to actively trade for profit in the current period. In other words, trading securities are stocks or bonds that management plans to purchase and sell in order to make money in the short term. Example, trading securities are the fastest moving investments. These stocks and bonds are traded and managed regularly on the open market to make profits. In the current period, in many cases, these investments are traded on a daily basis. On the other hand, OTC transactions are characterized by the following. The dealers who buy the securities offered for sale act as principals. The facilitator of exchange in the OTC market is called a dealer and earns his income by selling at a markup. More selling effort is required in stimulating OTC transactions. Bid and ask price are made to interested parties. The selling price and the sales volume are not necessarily reported. Transactions on the stock exchange are done on action basis, where all buyers and sellers and securities are converged, standing together on the trading floor, and securities are sold to the highest bidder. While buyers and sellers in the OTC market, however, are not situated in a single place, but connected by negotiation through electronic means. Stock Exchange is a private, non-profit, self-governing organization which furnish facilities and establish rules and regulations that strictly govern transactions on the floor. In the stock exchange is a marketplace where securities such as stocks and bonds are bought and sold. Bonds are typically traded over the counter, but some corporate bonds can be traded on stock exchange. Stock exchange allow companies to raise capital and investors to make informed decisions using real-time price information. Exchange can be a physical location or an electronic trading platform. True people are typically familiar with the image of the trading floor. Many changes now use electronic trading. The over-the-counter market is an intangible market usually referred to as the off-board market or third market. The OTC operates refers to the trading of securities outside the stock exchange, having a broader scope than the latter. It also covers trading both in listed and unlisted securities, new issues, and seasoned securities. Unlike stock exchange, there are not there are no set up of rules to follow as its operations embraces the trading through brokers or dealers. In whatever place and regardless of the methods and facilities used, trading is predominantly carried out through telephone calls and other forms of communication that would establish direct contact between broker-dealer and their various clients. In this over-the-counter market, is a decentralized market in which market participants trade stocks, commodities, currencies, or other instruments directly between two parties and without a central exchange or broker. Over-the-counter markets do not have physical locations. Instead, trading is conducted electronically. This is very different from an auction market system. In an OTC market, dealers act as market makers by quoting prices at which they will buy and sell a security currency or other financial products. Private placement. A private placement is a sale of stock shares or bonds to pre-selected investors and institutions rather than on the open market. It is an alternative to an initial public offering or IPO for a company seeking to raise capital for expansion. Investors invited to participate in private placement programs include wealthy individual investors, banks and other financial institutions, mutual funds, insurance companies, and pension funds. In private placement refers to offering and selling shares in a company to a small group of buyers. Individual investor. A retail investor, also known as an individual investor, is a non-professional investor who buys and sells securities, mutual funds, or exchange-traded funds through traditional or online brokerage firms or other types of investment accounts. An individual investor is someone who invests in securities and assets on their own. Usually in smaller quantities, they typically buy stocks in round numbers, such as 25, 50, 75, and 100. The stocks they buy are part of their portfolio and do not represent those of any organization. Ways in profiting in stock exchange. There are ways to make profit by investing in the stock exchange, such as earn income on share investment in the form of dividends, commensurate to the volume of shareholdings. Spread markup generated from stock trading. The difference of selling prices over the buying price of shares. Earning from capital appreciation on the gains made on capital. Principal investment when share increases. In the ways in profiting in stock exchange, investors can profit from stock buying in one of two ways. Some stocks pay regular dividends, a given amount of money per share of stock someone owns. The other way investors can profit from buying stocks is by selling their stock for a profit if the stock price increases from their purchase price. This is the end of my report. Thank you for listening.